Oh, I pressed the wrong button. What's going to happen? I don't know. It's going to keep counting down. That's what happens when I press the wrong button in the wrong bank. Welcome to Monday. Welcome to Monday. I don't know, Kyle. Is it too late to do the music? I don't think it's too late to do music. It's never too late to do the music. So this morning, it is Tuesday, March 22nd. I can't get my days right ever. It's going to be my calling card. But we have an ode to the service departments coming at you hot in just a second. The people really want to know who I is and who I be. They stop and steal. Oh, man. I don't know what we're doing today. But here's the deal. It's Tuesday, and we're like 3 miles down the road before we even got started today. So we started off today's email. Kyle, I'm going to let you read it because you wrote it. And it hit me like, so when we put together the emails at the end of the day, and depending on how the day plays out, we may or may not be a part of it. Like, some of us put articles. And so last night, Kyle's the one that kind of put the bow on it, and he wrote the lead. And I got to read it this morning when I opened my email. And let me tell you, it is exactly what I needed. A former service writer, but it reminded me of, kind of an element of what we're doing as ASOTU, an element of like the keeping our finger on the pulse of what the real hearts of the stores are. And so, go ahead, Kyle. I'm going to let you read it.
Yeah, I'm going to give a little bit of context because yesterday was a little bit of a crazy day for us in the ASOTU world, in just business. We had a lot of meetings. There was, there was family stuff kind of happening in and out. It was my first day kind of away from my family, my wife at home with the baby. And there's a lot. So as I sat down last night, the word resilient kind of came in my head. And that's what I started to write the lead with that. And then I thought about just like the industry and what the word resilient meant. And then I went back to, when someone really encouraged me back early in my sales career to make sure and say hi to every service person every single day. And just kind of this toast came to mind. And so I'll read it. So it's here's to the service teams, the ones that get in before everyone else. The ones that pull a car in on a busy Saturday because the tire pressure was low on a car about to be test driven. The ones that meticulously break down an engine just to wait on the warranty inspector to arrive. These are the unsung heroes we want to celebrate today. ASOTU family, we want to encourage you to say thanks to the women and men in our service departments today. Take a moment to step out of the office or the showroom and onto that incredible shop floor because it takes all of us pushing back. And yeah, so that's the all. It's not just, the glitz and glamour of the showroom. It's not the salesperson that made their first sale, that cut their tie that we see on LinkedIn. Actually, the other thing that spurred this on was, and I couldn't find it. I scrolled, I tried to find it. I don't know who it was, but someone posted that their dealership wanted to do something special for their service department. And if anyone found this on LinkedIn, I don't even know who it was, but if you can find it, I love this photo. But they got banners, big old like championship banners that they put up in front of every service bay with the service technician's name, their nickname, what they do. It was like a championship banner that they put up. And the picture is of that service technician taking a photo of this banner. Right.
Oh, neat.
And where he's sending that to all his friends and family. He's probably posting it on social
for sure.
Yeah. And it was just this, wow, celebrating those women and men that are in the shop or in the parts department that typically just kind of go unnoticed by customers and by the photos that we see around the store or the photos on the Google My Business or Google Business Place. That's celebrating the entire industry coming together.
Man, I love that so much. I mean, like I said, it's what I needed to hear this morning because it reminds me like there are thousands and thousands of those people doing that right now. And on the West Coast, right? They're getting in right now, right? It's just 6:15 a.m. in California. And David Long, at the Hansel Auto Group, right? Someone's walking into one of David Long's stores that he manages, and they're putting the lifts down, right? And they're shuffling the paperwork, and they're looking at their schedule for the day, right? And they're making sure the water bottles are fixed. Like, man, that just goes a long way, right? So like, how can we continue to do that? Well, if you're listening, you can continue to do that right now, right?
Yes.
It's not too late. You can do it right now. You can encourage those people. Man, what a great way to start the show. I have some fun stuff to talk about today. Some fun stuff, some business stuff. We'll get to the business stuff first. Let's get to business. Automotive news article from, I think it was yesterday, maybe 2 days ago. It was talking about the acquisition climate in automotive being possibly even more favorable in 2022 than it was in 2021. Last year we had like Alan Haig on, and we were just talking about the people that were rushing to get their dealerships sold if they had been thinking about it because conditions were favorable, right? Pricing was high, valuations were high, and yes, it seems like it's continuing. I mean,
off to the races yet again. Aaron Kerrigan said, if you had asked me in December, I would have expected the buy-sell market to be around the same level. But based on the first 2 months of this year, I think the buy-sell market of 2022 will be more active than 21, which I didn't think I would say, which is wild. Like, I can't. It seemed like every single week last year there was massive M&A, acquisition,
especially second half of the year.
Yeah.
Velocity ramped up so much. And I mean, we're probably riding that velocity still. I didn't see anybody talk about this in the article. Alan Haig, who we know are friends with here, he says the deals in the pipeline indicate it's going to be as good a year in terms of the number of rooftops, but even better in terms of the value that our clients are getting for their businesses. So,
wow.
So he's saying like maybe similar number of rooftops, but more money for the stores. And, I didn't hear anybody say this in the article, but remember toward last year and at the year-end extravaganza, everybody was rushing because of the potential tax rate change, capital gains tax rate, so people were like, hey, can we get this transaction closed fast enough? Right. So people were rushing. So I wonder how many of like the Q1, the January, February deals were ones that just couldn't get it. You know what I mean? That just couldn't get it done. So I didn't hear anybody mention that. I wonder that, but here's some totals that were highlighted in the article. In 2021, there were 376 transactions for a total of 673 stores. So averaging right around 2 rooftops per deal. In 2022 so far, so we're not even through Q1 yet. Actually, remember we still have like a week and a half left, and things tend to close at the end of a quarter. And so at 2022 so far, there have been 52 transactions for 78 stores. So definitely more transactions. The ratio is much lower. It was an average of 2 last year total.
Right.
This is a lot more closer to like 1.3. And it's just,
well, I mean, even just in the people that you and I know, I know of multiple owners, dealer principals, general managers that are seeking out opportunities to purchase right now. And so
they're on the
people are on the hunt. They're looking for it. And I think it's indicative of, the reality that if you don't have, multiple rooftops, the capacity to be market players in a particular region is going to be lower and lower. Right. So thinking about so many of the groups that are going after the Carvana and Vroom business on a regional or national basis, we saw, Driveway with Lithia, and we saw Asbury with ClickLane, and Penske with CarShop. We saw them taking the lead at the big group scale, but some of the 15 to 20 store groups are making that push right now. So I think the move is to go from that 3 to 5 store group to the mid-teens so that you can execute at that level.
Yeah, you need a certain, critical mass to get that operational efficiency. Like you get a little at 3, 4, 5, but you really start to have leverage when you get over like a dozen, right? That's when you can start like hiring people to run whole departments that you probably couldn't afford at 60. We talk about this in marketing a lot, right? At some point, you have enough leverage that you can pull out of like the agency dependency and get into like a serious CMO, right? A serious creative director, right? A serious content department. And then that leverage just multiplies exponentially in like growing the value of your brand and your business. So, I think there are pros and cons. When we talk about consolidation, always pros and cons. Nothing is ever all good or all bad. Some of the pros of consolidation are definitely innovation, right? You're going to take stores, obviously if someone's looking to sell, they probably have been struggling for a little bit, or at least had their foot off the gas because they've been looking, saying, okay, where's my off ramp? A lot of the stores that might not have a succession plan in place. And so, you get tired, right? I'm 60, I'm 65. Like, look, this
Man.
all this new stuff. Brian Kramer's running around with Oculus goggles on. I'm like, I think I really want to enjoy my grandkids and the boat and all the decades of 80-hour weeks that I put in before I throw on some Oculus goggles. Let me
and a big chunk of change is staring you at in the face. Right?
Oh yeah, I mean at that point, most of that too is like generational money. You know what I mean? Like most people that are selling the store, most are like, it's not really going to make a substantive change to my lifestyle. But so all that handing the torch to someone who is looking to build in operational efficiency, and innovating tech systems and innovating customer experience systems, right? That's good for the industry because it levels us up. On the flip side, right, we do lose some of the family heritage and legacy that really makes automotive and people, that transition from a smaller store to a bigger store might feel bad, right? There is something to be lost, right?
Yeah.
But there's also a lot to be gained. So I think there's never a clean way to cut it. But, the consolidation with the right people, with the right mindset, I think overall is a win for us.
Yeah. I think I think it's necessary for franchise retail to kind of stay in the game. But I get that there are cons and there are those that, that have a little bit of loss of feeling that are at those single rooftops and the employees and things like that. So I think that's encouragement to those that are purchasing stores to watch that and realize that when you're purchasing a store, you're not just purchasing a financial worksheet. You're bringing on people, and you have a lot of opportunity to care for a whole new set of personnel.
Yeah. So I've seen a couple great scenarios when stores are being acquired. Some people that pop to the top of my mind, Liza Myers Borches, like when they buy a store, boy, do they put their arms around the people in a great way. The West Her Group out of Buffalo, Matt Lasher leading the marketing team there. Like when they buy a store, like they are just so caring and sensitive. It's pretty awesome to watch because there are a lot of great empathetic groups that are really improving company culture by through acquisition. Let's see. Let's bounce across the pond. Tesla just is about to deliver its first 30 vehicles from its Giga factory in Berlin, the Berlin Brandenburg Giga factory. They're going to deliver 30 Model Ys. The Performance Edition is going to be the first 30 that came off the line. They've been building the plant for 2 years, and the vehicles cost $70,000 US. It's like 63,000 or 64,000 euros. $70,000 a piece, popping off the line. They have 3,000 of the 12,000 workers. 12,000 workers
in a place. That's nuts.
Are hired. And JP Morgan popped the forecast out. The factory will produce about 54,000 cars this year and 280,000 next year and 500,000 vehicles by 2025. It's a lot of cars.
Y'all. Tesla's playing game right now. They're not messing around. That's for sure.
The $70,000 for a Model Y is a lot of money.
It really is.
We talked about it yesterday with the $48,000 base Model 3. Like
it sounds like all new cars right now just are a lot of money.
$70,000 hatchback. It's crazy.
Bro, I can't imagine. I mean, the money's out there. You think like there's got to be a way to make EVs affordable for the common, everybody. Because I saw this yesterday. There's a charging station that essentially has here's the gas price, here's our electric price for a full charge. And it was significantly less, but I'm still staring at that. Nobody, remember, literally nobody cares that can buy a Tesla how much their gas or electrical costs are. They just
right at $70,000 for the car. You're like, oh, I saved $40 this month. Right? Your payment was $300 higher. So in Europe, and the EV race has really heated up more quickly than it has here in the US. So we kind of watch that as indicators. One of our investors and Crackerjack dealer Brian Benstock has been over in Europe, trying to bring get a look over the horizon, bring some things back. So VW owns actually a 25% stake in the EVs in Europe or in Germany at least. So they have 25% stake. Tesla has a 13% stake. So VW is really stepping up in their EV investment. They just invested like 2 billion euros in so it's more than $2 billion, 2 billion euros in a new plant and several battery factories. So, I mean, they're stepping up to the plate, and they're saying like, all right, we're going to do this. We're going to do this. And so, yeah, just a little EV news from over the pond.
A little over the pond. Speaking of,
oh, here we go.
Over a Tesla.
Stop.
Segue.
Time.
We just gotta roll the footage first.
Yeah.
Just,
if you're not
roll the
watching, we'll
footage.
explain it, but go ahead. This guy, all right, I'm going to explain it. So we have a Tesla waiting at the bottom of a big hill. He flashes his headlights, and the hill's got to be, I don't know, 100 feet. Now you're hearing hill goes to the left. And the landing. And the skid to a stop. So somebody in LA launched their Tesla Model 3 over the hill. Obviously, the cops are looking for this guy. And you don't really see anything identifiable in the video, but this sucker just rockets up this hill, takes air. The front end of the vehicle looks like it might flip, but it just lands kind of on the front end of the car. The hood flies up, the brake lights go on, and I don't know. It's just a thing. Oh, Nathan comments, I heard it was a rental. I hope they bought the extra insurance.
I'm telling you, people are doing the most ridiculous stuff with Teslas. It's literally,
if you've ever driven one, it does feel like a go-kart.
Right.
I understand that. Have you ever like driven a go-kart, like gone electric go-kart racing, and then you get back in your car? You just take the corners a little tighter and a little faster.
Right. Yeah, exactly. No, so I think it's indicative of the culture around EVs. I think, it's a very we've had the story of a guy hacking a Tesla, right? Now we've got, and then, playing Christmas songs with the Tesla is the video. It's a whole like meme culture around a car.
I feel like there needs to be like a Knight Rider edition. Like if he had that little red light in the front flashing back and forth, it kind of reminds you of like the 8-year-old in me that always wanted a turbo boost button. Right.
Yeah. Yeah. It's exactly what it feels like.
We need to get David Hasselhoff in a black Tesla that looks like Knight Rider, I think is what the world needs a little bit more of. Man. Let's go. We're running out of time. We're out of time. We were going to talk also a little bit about South by Southwest Festival, the big technology and music culture festival was the biggest deal in Austin. COVID happened; it got canceled. Last year was virtual, so you take that what it will be. And the conference came back this year. It was mostly a lot about NFTs and musicians and all this collabs, but I gotta say the energy around it didn't even seem nearly the same.
It didn't seem there. I didn't see as much out there as what I normally do on the interwebs. So,
and even when you look for articles, like there's just not. I'm like, man, no one's really even covering it really well, which is interesting because we happen to just get back from NADA, which had all the energy and actually more energy than ever before with a vengeance. So I think it's easy to get in that box because we're in automotive and like, okay, we're back. No, like big other conferences like South by Southwest, guess what? They can't pull that off. They didn't pull it off this year. Yep. I saw some pictures of it. It was funny because you see like 100 people in this room and everyone's looking at their phone. Like no one's even looking at each other.
Wow. We've got a really unique industry. Oh man, there's just so much to talk about, but super unique industry that I think just has the energy to pull off so much right now. So I'm pumped.
Yep. So I guess there's your Tuesday shot. We got off to a rocky start, but we pulled up. If you're not on the email list, sign up ASOTU.com. Go to the website. Check out that Ode to Service Advisor. Share it with a service advisor or service person that you love.